Hello and welcome to Moneycontrol. My name is Ashwin Mohan and you're watching a brand new edition of Deal Central, where we get you the news and the views that matter from the voices that matter from the world of M&A, private equity and equity capital market transactions. On the hot seat today is a very special guest, Ravi Lambah, the head of India at Singapore investment giant Temasek. Ravi, thanks so much for taking out time. Always a pleasure hosting you on the show.
Thank you, Ashwin.
So Ravi, let's kick back. Let's sort of kickstart this interview with a very big announcement that was made last year. And this is when I caught up with the Temasek team exactly a year back in July last year. And that's when you had made the big announcement of a $10 billion investment target for India in the next 3 years. Since last July till now, there haven't been any big bang deal announcements by Temasek. Of course, there have been a whole host of minority deals, say for example, Lenskart. You had Ola Electric, Niva Bupa, Mahindra & Mahindra's EV business, but no billion-dollar buyout or a billion-dollar block deal, unlike some of your other peers. So is there a reassessment or a rethink of that $10 billion target and a conscious sort of cut in the size of the deals?
Actually, no. Last year we invested $3 billion in India. So that was our, you may recall the Manipal Health.
Absolutely. I was looking at the July to July.
Yeah, so that investment closed after that. So,
all right.
So that $3 billion gets accounted in that period of time.
Okay.
And we still are looking at if we can find the right opportunities, in the next 3 years we think we will still we'll try to deploy $10 billion. So our target has not changed. We see the deal flow, we see the opportunity set. So our run rate of $3 billion for last year actually corresponds to that $9 to $10 billion that I'd said last year. So nothing has changed. Currently, our portfolio in India is about almost $50 billion Sing dollars. So that's about $37 billion US dollars. And that's what we are, that's our exposure. And the $10 billion that I referenced that we will try to deploy if we find the opportunities excludes what our subsidiaries may deploy in India as well. So, right. Our subsidiaries who are actively investing in India, like STT on the data center side, there's Semcorp on the on the renewable side, renewable power. There's Capital Land on the real estate side and logistics and warehousing side, and of course then there's Singapore Airlines and Singapore Telecom on what they're doing with their businesses here. So if you add all of that up, our exposure is almost $50 billion Singapore dollars. And $10 billion is what we will deploy, and then in addition, whatever else they may deploy. So the total Temasek view in India has not changed. We're still positive. We're still looking to increase our exposure here.
So you remain committed to that $10 billion target?
Yes.
Right. If you look at the data or the size of the portfolio of India vis-a-vis the overall global Temasek portfolio, at the end of March 24, it was 7% vis-a-vis 6% a year ago. When do you think, since you're so bullish on India, when do you think that figure is likely to hit double digits, as and when India starts growing more and more, and as Temasek scouts for more assets? Could you give us a timeline?
We don't have a predefined timeline, but this number was 4% in 2020.
Okay.
It's 7% now. And it's really a consequence also, a function of also what the total portfolio value is and what's happening in other markets. Because we don't allocate to geography and sector. We are bottom-up driven. If we find the opportunity, we will invest. When it becomes 10, I don't think we focus on that. What we're focusing on is really in India, increasing our portfolio, increasing our exposure, getting a resilient portfolio that can give us a compounded growth over a long time. And we think the market in India gives us that opportunity.
You refer to the markets. Now the Indian stock markets have been euphoric, over the course of the year that we've seen so far, the first 6 months. The Sensex hit the historic 80,000 point mark for the first time. Nifty hit record highs every now and then. In fact, the journey of the Sensex from 75,000 to 80,000, that took just about 58 sessions. So there's a lot of buoyancy in the market. In such an environment, what has been Temasek's strategy when it comes to placing fresh listed bets? Are there any sectors that perhaps Temasek has looked at to take advantage of the current buoyancy? I know financials is one of your pet subjects or pet themes when it comes to India. Could you throw some light on that?
Sure, a lot of questions in that. So let me try and address them. So I think the market valuation is something we always look at carefully because the valuation reflects what companies are trading at, and if they're trading at a valuation that we're not comfortable, then we just will not invest at that time. So let's put that one aside. And India as a market has always traded 1 or 2 standard deviations higher than global averages. So, but the market trades higher because there's an expectation of growth, higher growth. There's an expectation of outperformance of the equity, and therefore you have to take that call when you invest. And for us, valuation is always a question of intrinsic value at that time. So if we find and there's always times in the market when some stocks are higher, some are lower. So what is our job is to go and look for the find value, albeit in a market that's buoyant, as you say. And if we don't find value, we will just wait. So that's how we think about the equity markets. But we, as you know, Ashwin, we can invest in public and private. We are agnostic. So the private markets always give you an opportunity to invest on a negotiated basis, and that's where we will try and find value as we put capital to work. In terms of, you talked about financials. Yes, financials is still very important to us. It's,
sure.
We see almost half our exposure in India is in direct exposure is in financials, financial services, and we've been growing that exposure from just what was primarily banks before into insurance, into both general and life insurance, and fintech. So all of those are still work in progress for us. And as you may have seen, we took an investment in a private insurer last year. We have increased our investments in the public listed insurance companies. So I think we're on track for that.
Over and above BFSI, any other sectors in the Indian listed space that you perhaps have looked at in the last 6 months?
I think it's primarily banks and insurance for now.
Right.
And over time, we will, I think, expand that as we get more comfortable.
Right, point noted. Now, India's stock market buoyancy has also led to several IPO aspirants, and these are aspirants across a whole host of sectors, right? Yes. There were certain companies or certain sectors that you thought would press the pause button, but they have now accelerated their listing plans. It's not just Indian companies, but also big global MNCs that are making a beeline towards India, and that's because of the better valuations, higher multiples. Take, for example, Hyundai, yes, the South Korean auto giant. They filed papers recently for a $3 billion IPO, India's biggest ever. The question that I want to pose to you, and since you have an Asia lens, the question that I want to pose to you is, do you think more global MNCs are likely to follow suit and start their IPO process in India, looking at Hyundai? Or do you think they'll wait and watch to see how the Hyundai listing happens later in the year?
I think if you go back in time, it's not a new phenomenon for us to see in India, where global MNCs have listed their subsidiaries here, and they've actually done quite well. The multiples in India, and several of them are actually much higher than what the parent is trading at. But I don't think that's the decision. I don't think that's the only decision sort of factor. Of course, listing a company in another jurisdiction requires you to do a different level of governance. You have to make sure you cover for the right governance framework for related party transactions, intercompany transactions that always exist in a situation like this, where there's an MNC and there's a subsidiary that's unlisted. And then there's of course the question of, if you are not happy with it being listed, can you then take it private again, which is not that easy to do in India and in some other markets as well. So there's a whole host of what I would call decision factors. Valuation is only one of them. Today the valuations are high, tomorrow they may not be, for whatever reason. So I don't think, in my view, I don't think that that's the way to drive the decision. I think the key question to ask is, what else does the IPO give you? It gives you access to capital. Does it give you access to more talent? Can you grow a business more? Can it become more resilient if it's listed? Can it tackle challenges better? So all of those, I think, come into play. And if the answer to that is yes, then I think we will see more companies listed in India.
Any sectors? Or do you think that it's just on a case-to-case basis?
I think it's going to be very case. I don't think this is a herd mentality question. I think that every company has their own reasons to list or not list.
Right, so the jury is out on that one. Sticking to the topic of IPOs, some of your portfolio companies in India, they have sort of started taking baby steps towards an IPO, namely Dr. Agarwal, Mol Biodiagnostics, Neva Bupa recently filed draft papers. Now, I know you can't speak on specifics, but there's one jewel in the crown, right, which is Manipal Hospitals. That has bulked up quite a bit. That has seen a few acquisitions over the past few years. When can we expect Temasek to perhaps explore a listing of Manipal Hospitals in India, since you are a majority stakeholder?
I think we will take Manipal public at the right time. I think there's good alignment with all the shareholders that the company can be listed. And it is a great business in terms of how it will add to the healthcare sector and the public in the stock market. So we think it will happen. It's a matter of the decision. The decision making is dependent upon a few things. One is, effectively, when do we think it's ready? There's a lot of work to be done still in terms of some of the greenfield and the brownfield organic expansion that we're doing. Maybe there will be some areas where we want to consolidate. We have recently consolidated our what we used to own through shares.
Yes.
The Medica business in West Bengal. That's recently been sort of acquired by Manipal.
Yes.
So there's work to be done, and then once we think we're kind of done with some of that, our sort of current framework of what needs to be completed, then we will explore a listing.
So
there's no timing in our mind,
right.
but yes, we will. This company will it will be a listed.
The reason I'm asking this question is because whenever it does list, it could be one of perhaps it could be Asia's biggest hospital IPO, right? Because there's a lot of value there. You also came in at a premium. One quick question again on Manipal. So can we expect more M&A, or will it be organic growth and then the IPO happening? Will you bulk up the portfolio even more? Because there are a lot of hospital assets that are up for grabs.
I think we evaluate everything that's out there, and then we take the decision on the buy or build. And sometimes build makes more sense, especially when you have scale. And buy only makes sense if there's something really special that adds to the portfolio. Manipal Hospitals now is already, I would say, the top 1 or 2 hospitals by beds in the
Bed
country.
capacity, yes.
So the scale is there. Now it's a question of augmenting the business and making it, a more valuable business. So we'll have to look at these deals one by one.
So no timeline as such.
No time,
for that listing.
because there's no reason to have a timeline. We have long-term capital. Our partners are also long-term in that nature. They've just come in with us, some of the new ones. So there's no rush. So the IPO, actually, to me, if I step back, the IPO is only one event in the company's timeline. There's a long journey after that. So we have to time the IPO well.
All right. Let's shift focus to the block deal frenzy. Another interesting aspect of equity capital market transactions over the last sort of 12 months, over and above the number of IPOs coming in is block deals. Several big block deals. I think a few months back you had exited Policy Bazaar, PB Fintech, the parent,
Yes.
with a block deal around 2,400 crore rupees. You also had a block. You also participated in the block for car trade. Some of your other peers in the past year have also struck big block deals, and these are $800 million to $1 billion block deals, exiting it. So that has now become a trend of sorts, where there are PEs looking at striking block deals back to back and then completely exiting the company. Do you think this wave of block deals has perhaps dampened the classical old M&A auction route? Because more and more people seem to be opting for it.
Interesting analysis. I would look at it a little differently. I would say the capital markets in India have matured significantly, and they continue to mature. Right? So India is now the 5th largest market by capitalization globally. And what does that mean? To me, that means that there are larger companies listed, larger market cap, better average daily traded volumes, and the ability to go in and out is much easier in large numbers, which it wasn't there for, if you go back 5-10 years. So that effectively gives you the flexibility to do what you just outlined. But I don't think it takes away the fact that you will do things on the M&A or the private side as well. It comes down to what is the opportunity you're seeking. So I think to your good question, if I want to sell $1 billion of stock, and if I can do it in a day in the public markets, the company is listed, and I can do it at a small, tight discount, it's a no-brainer. If I want to get a premium to what I'm trading, what I want to get, and I'm selling control, then M&A makes more sense, because then someone will pay me a premium for control. I will not get that premium in the public markets. So I think it comes down to what kind of deal type, timing, and what is the aspiration for value.
Right. I know funds like you look at returns, whether it's private equity funds, sovereign wealth funds, pension funds. Of course, the returns matter the most. We have seen a number of IPOs in India where there is a big chunk which is OFS, or offer for sale, not much growth capital, right? Do you think that's a worrying trend? It's all about just partial or full exits and not much capital coming back into the company. I know I'm acting as a devil's advocate over here, but
no, I think it's a good point. But it comes down to what the company needs, is my sense. I mean, the OFS, as you call it, is really an exit for a particular investor, because the investor wants to exit. But that does not necessarily mean the company needs primary capital. So why should the other shareholders have to go through dilution when it's not necessary? So I look at it as on a need basis, what is the right construct? Ideally, if you are going public and you want to raise some capital and you can, facilitate an investor exit, that's a good combination that leads to a particular public offering. But I don't see that as a negative.
Right. So we have spoken about IPOs, we've spoken about block deals, we've spoken about one of your key portfolio companies, Manipal. Are you still in the race for Haldiram's? Because that's an ongoing process vis-a-vis another consortium which is led by Blackstone. That is perhaps, in fact, it will be, if it fructifies, the biggest private equity buyout potentially in India. So is Temasek in the race currently? Because I believe you have tied up with a peer, Bain Capital.
I cannot comment on specific situations on investments. But what I would say to you is that we think that the consumption demand in India is there, the spend is there, it's rising. So we should look at all opportunities in that space. And we will, when we complete an investment, you will hear about it.
All right.
Yeah.
Over the course of the next year, if you could just pick some sectors, and this is where, Ravi, I
Sure.
want you to stick your neck out. 3 top sectors in terms of fresh investments where Temasek would pay some attention, and also 3 top sectors in terms of exits, because that's also important, right? So if you could split them into those 2 clubs.
Without putting a time frame in mind,
Sure.
What I would say to you is that we have 4 trends that I may have mentioned to you last year: sustainable living, future of consumption, longer lifespan, and digitization. So globally, we look at these trends, and these trends guide us on how we put capital to work. In India, we find all 4 are present, and that we can find opportunities that can, play to these trends. So yes, so we will look to invest across all these trends in India. But if I sort of double click on that, what does that mean? That means financial services will always be a big part of what
Sure.
we want to do. Healthcare will continue to be an important aspect of what we want to do. And then the broader sort of theme around digitization, whether it's technology, whether it's fintech, whether it's edutech, whether it's health tech, agri-tech, all of that I think will be important to us. So those are the 3 areas where we'll put capital to work. But beyond that, we have quite a lot of activity going on within our broader portfolio with our subsidiaries. So, for example, ST Telemedia is digital infrastructure. So they are probably the largest data center operator in India now, and they will continue to expand that portfolio. Renewable side as well, there's a lot of activity. So I think as Temasek as a whole, as you look at what we're trying to do here is to build a resilient portfolio that will last a long time and return compounding returns for a long period of time. And that will mean that we will have some diversification in the portfolio. But these are the sort of trends, and these are the sectors that we will likely build upon.
One quick question before I move on to my last one. You referred to digitization, and you have a substantial exposure to the Indian e-commerce and startup sector, right, across different niches. I know this is work in progress, and we spoke about it last year as well. But do you think there's been an improvement in overall discipline when it comes to unit economics and path to profitability in the startup sector in India?
Yes, I think not only in India, globally, we've seen this. So there's a lot of discipline in terms of spend and burn. There's discipline in the equity available to these companies. And then there's a cleanup happening, which is also, I think, positive because it sort of, enables people to focus very, very laser focus on the bottom line. And we've seen this across the portfolio. And where there has been situations where companies are making all the right progress, making all the right steps, and they needed capital to accelerate that, we have also doubled down on investments in India and overseas as well.
Right. Budget 2024 is around the corner. As a significant investor in India, what are some of your key expectations from the finance minister in terms of the policy environment and how perhaps there could be reforms that could further encourage investors like you to pump in more money into India and make the overall environment more friendlier?
I mean, we will see what the budget brings. Our hope and anticipation would be that it'll continue to be pro-business, pro-growth. We've seen the government, even in the past several years, almost a decade now, being pro-reform. So we expect the reform process to continue. We expect policy frameworks to be set such that that it is pro-business, and more importantly, it is consistent. So then we can make our investment bets. So we will wait and see. We are positive on the economy. This is the country, the GDP growth at 7% or so over the next sort of 24, 25. We expect that should happen. I said before, the stock market is growing well. stock, the capitalization of the market as well as just the SIP flows are pretty strong. We find a significant amount of capital available to fund the right businesses is coming from many places. Entrepreneurship is strong. We find great talent in India to put capital to work. And plus also, of course, there's the demographic dividend in the country. And then there are a few trends happening which hopefully the budget will also, focus on. There's significant, the supply chain benefits that India can probably get as it sort of feeds into that, supply chain in the China Plus One supply chain, given our low-cost manufacturing base. So there's lots of great things that we see happening, and hopefully the policymakers also see it that way, and then we'll see what the budget brings.
Right, Ravi, thanks so much for sharing your thoughts, and I look forward to the next mega deal announcement from Temasek in the coming months. All the best for the year ahead.
Thank you, Ashwin. Thanks to you. Yeah,
right.
Thanks, sir.
With that, it's a wrap on this edition of Deal Central. Thank you so much. Keep watching Moneycontrol for more news, views, and updates. This is Ashwin Mohan signing off.